Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick.
Hi, I'm Kevin McCormick, and welcome to my weekly outlook for the week of May 7th. This week I'm going to be covering the S&P 500, the Nikkei, natural gas, wheat, and corn. Before we jump into the charts, I just want to thank all of my new viewers and subscribers out there. We've had over 10,000 viewers the last 2 weeks. And I just want to highlight for all my new viewers out there that in addition to my weekly review, I do have my Trader's Toolbox to help you understand some of the indicators I talk about in my videos. I don't always do a deep dive on how I use these indicators during the videos. So go check out the Trader's Toolbox to see how I use and recommend you use some of the indicators during these videos. As always, this presentation is for educational purposes only. All right, so we're almost through earnings season. Just a few companies left to report in the S&P 500. And if you've been watching for the last couple of weeks, you know that it's been very consistent so far. We're having constant beats, basically, by all the S&P 500 companies. We're now at 83%, 77% beat estimates, 75% beat the top line. This is not what the media and all the big money hedge funds were expecting for earnings. They've been very strong and resilient. They were expecting a decline, which is why, in my opinion, I feel like the market's been holding. And we'll jump into where I see the S&P 500 going and then the Nikkei as well here in just a couple minutes. So with that said, let's jump into the charts. As always, I'm going to kick things off by taking a look at the S&P 500 futures contract to kick things off. So as I've said the last couple of weeks, the enormous short position by the hedge fund has me very concerned about the possible upside breakout in the market, not the downside, because this short position is one of the largest in the last 10 to 15 years. And when the hedge fund community gets this short, it usually does not go as planned for them. It's actually one of the reasons that's been stopping me from thinking that we're going to have a sell in May and go away scenario. I'm starting to lean more towards just a flat May possibility, but we have the opportunity for a major breakout in the S&P 500. So let's take a look at the daily chart. Here on the daily chart, you can see we've been in this range now for quite a while, but the Williams percent R trend of momentum is starting to flatten out, looking like it wants to head lower. We did have a buy signal on Thursday, which aligned with the Friday rally, but I don't really see us breaking out or down in the month of May. I think it's going to be a pretty flat month at the end of it, but a lot of volatility in between. The one thing that I think that could cause a breakout is if we do get above 4,200, I think we could very quickly see heavy short covering in the hedge fund community, and that could cause us to spike higher, but I think that spike will be short-lived. So if you're looking to get long the S&P 500, I'd be waiting for a breakout around 4,200. Now, if you're looking for a short opportunity, let's take a look at the Nikkei. Now, while I think the S&P 500 could be flat, I think the setup to short the Nikkei, which you guys don't hear me talk about too often, is looking pretty strong. Let's first take a look at the COT report here. And as we can see, opposite of the scenario that we have in the S&P 500, hedge funds are kind of here in the middle, but commercials are now in a sell area on the COT report. When we take a look at the Williams valuation, the Nikkei is overvalued when it comes to gold, and compared to the US dollar, US bonds is about to head up there. That's a bearish sign. And from a seasonal perspective, we should be looking to go lower right here, right now. And that should carry us lower all the way through the month of May, and with a bounce expected starting in June. If we take a look at the daily chart, the one last piece that really hits home for me as why I want to take a short position, if possible, depending on your trading setup in the Nikkei is, I'm not going to show it on here today, but we also had a DeMARK sell 13 on this day, on May 1st, and then we had the immediate move lower, and then we started to come up against the 18-day moving average, and we actually bounced on Friday like the rest of the market did, higher. Now we're moving back into the sell area, and so this week, I'm hoping that we can actually probably get a couple more days higher, and then I'm going to look for and take sell signals in the Nikkei. Now, let's take a look at natural gas. Okay, just a quick look at natural gas today. If you've been following me for the last couple months, you know this is a market that I've been watching, thinking we're getting ready to make a bottom, but we have never received that confirmed breakout to let us know the bottom is in. And unfortunately, this week, after spending some time above the 18-day moving average and the will stop support area, we broke through it and made a lower low in natural gas. This is not a positive sign for making a bottom. If you're looking to catch a bottom in natural gas, I think this is a definite stay away for now. If you're looking to go long natural gas, if you're looking to go short, I don't think there's a lot of room there either. I just recommend in general right now, stay away from the natural gas complex. I'm sharing this with my viewers because I know many of you are big natural gas traders out there, but this is not a market I have any interest in putting a trade in right now. So let's finish up with the grain market. All right, we're going to start off by taking a look at the commitments of traders report for wheat. As you can see here, wheat has had heavy commercial buying during this decline the last 3 weeks. This is a very positive sign for the wheat market, and it looks like the bottom may have been made here. Very strong position and a very large short position by the hedge funds out there. So we could be in a situation, if we move a little bit higher, we could have a short liquidation and short covering that's going to have to occur. But in addition to this commitments of trader report, we have multiple other buy signals out there. We just got out of being undervalued against the bond, the dollar, and gold and wheat this week with the move. Seasonally speaking, we're in a position where wheat should be shooting higher right here, right now. And as everyone knows, the ADX indicator is one of my favorite indicators for calling market bottoms. If you want more details about how I use the ADX, go check it out in the Trader's Toolbox. But we just crossed above 40 this week, which indicates a bottom is in or is being made right now. As my viewers know and my subscribers know, this isn't an instant, like it happens right away. But this typically you'll see here hits, and then we move higher. So those are the indicators here, but there's one more key indicators that I am seeing, and that's using the DeMARK indicators that are telling me why wheat is making a bottom right here, right now. So let's jump into the DeMARK indicators next. Okay, now we're going to take a look at some of the DeMARK indicators on the wheat chart. I have sequential and combo up here, and for those of you who don't know, because I don't have the video out there, combo and sequential measure buying and selling exhaustion and is measured by 9s and 13s. I'm not going to get into it too much, but you can see here on this weekly chart, this is the weekly chart of wheat, called the top perfectly back here with this 13. We've had some nice reaction from the 9s. And then here, we've been in here trying to make this bottom for about 6 weeks now. We had this 13, then we had the 9, and now we had a 13 and another 13 these last couple weeks on a weekly basis. I like to look at the weekly chart to see if it aligns with a daily chart. So let's take a look at that next. And you'll see over here on the daily chart for wheat as well, very similar setup. This 13 didn't work, didn't call the bottom, but then we had the combo 13 here, and then a 9 2 days later, and we've gone higher from there. This is aligning perfectly with the areas of resistance. As long as these are dotted, there's still areas of resistance that the DeMARK indicators put in place. And then as well, I'm using trend factor in here to see how high we could go and where our areas of resistance are on the way up. I actually got long wheat off of this bar and took some profits on Friday. I'm still long, but I'm going to be looking to get longer on any pullbacks in wheat. And I think we could easily head up into this 700 area. You can see it's right in between the trend factor areas of resistance, and then this TDST line is here at 696. So I'm going to be looking for and taking buy signals to get long wheat some more. I took some profits on the initial move higher this week. The other thing to keep in mind here, as I've said for the last couple weeks, any bad news out of Ukraine and Russia about shipments coming out of Ukraine and the wheat market's going to move higher. We got that kind of news this week. So I think between the short position with the hedge funds and these technical indicators, wheat is ready to move higher right here, right now. So let's end our this week's update with corn. Okay, and before I jump into the charts on corn, I just want to highlight, I'm not talking about soybeans this week, but all of the grains are technically oversold right now. So I like to set up and corn and wheat the best. Not going to talk about soybeans this week, but soybeans are technically oversold as well. The entire entire grain market is oversold. This week, we're going to have an important USDA report on 5/12 about plantings and the health of the crops for this next growing season. I expect that to be a little bit on the bearish side, but what do I mean by bearish? That's going to be positive for a outlook on the crops for the U.S. But with that said, we've had our friends in China cancel over 500,000 bushels of corn this last week, and despite that cancellation, corn has moved higher. We would expect it to be moving lower with a lot of this bearish news that came out this week, but it didn't. And I take that as a very bullish sign that the fundamentals and the technicals are lining up right here, right now for corn. So let's start out by taking a look at the COT report once again. And wow, look at this move by the commercials. They have come in heavily the last 2 weeks and bought the corn contracts. These are the people who need corn for their products. And despite the cancellations from China, we have a huge move higher, very bullish signal when we have the commercials in here buying like this. And you can tell that the corn market's been range bound in this range for most of the year. So we could see a breakout coming soon in corn. In addition to that, you'll see here that seasonally speaking, we should keep moving all the way up until the end of June in corn. This week as well, we did get a DeMARK 9 buy signal this week. And you'll see right now that we're in the Williams %R overbought area. So myself, I'm going to be looking for a pullback in corn this week. And that's going to be my opportunity to get in there and go long corn. So my recommendation for everybody this week is look for buy signals in corn and wheat. If you want to get into soybeans, you can. But that's what I see coming for this week. Good luck with your trading, and thank you for watching Just Some Guy Trading. Don't forget to hit subscribe and like so you can find out when all my great content comes out every week.